All right, hello and good morning, trade pros. Welcome to the morning market update for this beautiful Monday, August the 10th. I hope you guys have or have had a great weekend or are having one. Who knows? Maybe you have a long weekend this weekend for whatever reason. But we're back to work here in the markets and in trading. We got a great update for you today. All right, so let's start out with Donald Trump and his EO, the executive order that was signed. All right, for the coronavirus relief that led to, an EO based on the fact that there was a failure of talks in Congress. All right, so here's what was signed. I think it was 4 separate executive orders. One of them was for enhanced employment benefits to $400 US per week versus a prior of $600 per week. All right, also providing assistance to renters and homeowners. Some stats out of the US showed that 1/3 of renters can't make their payment for the month of August, which is pretty troubling statistics. It's usually around 7 to 8%. All right. The other part is payroll tax deferral. And then this morning, Trump made some commentary that it could be permanent, this payroll tax deferral, and student loan relief. All right. Obviously, there's some reports here that are, questioning the legal challenges of these executive orders, but Donald Trump does have the authority to sign EOs. He has. All right, a lot of presidents have signed a ton of them. But here's the thing with the enhanced unemployment benefits. For some reason, it's a tongue twister for me. It would require the states themselves to pay that 25% additional benefit, which is raising the question, how many states could actually afford that? All right. And so, it was an aggressive action. It was one that the market was expecting. It was one that Donald Trump has said he would do. It's nothing out of what was expected. And I still think there's opportunity for discussion here to put together a bipartisan bill. We'll see what happens. U.S. Senate is in session today with some lawmakers kicking around to see if there's going to be any relief bill that's around for signature or for voting, not for signature. All right. And, expect a lot of discussion around whether or not, on Twitter from senators and from political analysts and pundits as well. Okay. We don't cover politics much, except to the extent that it affects the market. That's the most important. I really don't care to, take a side or argue or put energy into another side. We stay neutral only because that's how you're going to make the most amount of money trading. All right, you got to see the impact rather than want something to happen. It's more important to use your eyes than your head in this business. Remember that always. All right, but there's going to be discussion in the U.S. Senate today whether or not Donald Trump's action to bypass Congress, if it's constitutional or not. All right, expect to hear some of that for sure. I'm assuming, especially on the Democratic side. Okay, keep an eye out on that. Keep your ear to the squawk. Some of those developments could be relevant for the market, but for the most part, it remains a political thing until there's a bill and a deal, and then the market would react. All right. In other news, sanctions on the United States are reciprocated from China. It's sanctioning 11 Americans, including Ted Cruz and Marco Rubio, which what do they have in common? They're big China hawks, firm action against China. All right, so the sanctions have been returned from China to the U.S. U.S. put sanctions last week on Chinese officials, and the moves reciprocated here from the Friday decision. No members of the Trump administration, though, are on the list announced by China today, which is kind of good news. But the tensions are ratcheting up here between the U.S. and China, as they have been for months. Interesting to see what happens. Nancy Pelosi on the weekend said something interesting. She said China would rather have Joe Biden. It's an interesting comment for many reasons. I'll leave it there. In other news, Amazon and mall operator Simon Property Group. So funny because yesterday I was looking at the stock from one of our members, like, check out SPG. But Simon Property Group is, so I think this is for you, Christopher. Are you in here in the trading room? Say hello. Christopher G. I think he's here. Michael D says, yeah, the states can't print money. Very true. It's got to be done on a federal level. Only the Fed can do that. Anywho, Christopher G's not here yet, or he's just hiding and doing his own thing. But he asked about SPG. And the next morning, Amazon and SPG are announcing, or not announcing, but they're looking into turning stores that are called anchor stores. An anchor store in the mall industry is like one like Sears, one of those big, massive chains that take up a good chunk of space. It's kind of like your biggest customer in square footage. JCPenney, Sears, two companies have announced bankruptcy. that space could be converted into Amazon's very own warehousing and fulfillment centers. And this is just one more way that Amazon is absolutely proliferating retail space. They're just killing retail. There's another step right there. Hey, we killed you guys. Can we just use your space to put some of our stuff in there? Please. It's another move that it's very interesting. Keep an eye out on that, especially if you own SPG stock. It's probably going to be pretty bullish for that. All right. As an owner of a property, you want Amazon to be your tenant. Last but not least, in today's morning market update. So far, all these things, despite having some kind of impact on sentiment, they're not really affecting the market at all. S&P is holding it at its previous day close. We got above the 50 level, the 3350. We'll talk about the S&P a little bit in a moment. All right. But last on this update, we got a bid of farewell to robintrack.net. I don't know if you guys heard this, but Robinhood says they will no longer display how many users hold certain stocks. All right. And they're also restricting third-party API access to its data. So robintrack.net, RIP, peace out. It was fun. But I think Robinhood came to the realization, this looks like a very Robinhood-like move because everything's for sale at Robinhood. It just depends on if the money's good. All right. So I think they look at this, say, we're publishing all this data. Can we monetize this? We're giving free commission. We're selling all the traders' order flow to predatory algorithms. We're making money there off the spreads, and we're making money off of our orders. Great. Doesn't really help our traders or our investors, but it doesn't matter because it's commission free. So they just got to pipe down and take what we give them. That's how the model works. I'm just wondering if they're thinking, look, third-party API access, should we sell this data to hedge funds? Should we really monetize this on a bigger extent? Why are we giving this out for free? So keep an eye out on that. Step number 1, pull the data. Step number 2, package the product. Step number 3, drop it on the market. All right, that's how it works. But this ends a source of retail positions. A lot of reporters would look at robintrack.net, call it retail, see where retail is going long, what stocks to avoid. And a lot of these Robinhood traders be taking flack for buying bankrupt companies like Hertz and a lot of other things that are making the rounds of the media that isn't good for Robinhood or its investors really. And so what have they decided to do? They've decided to hide the info. We'll see if it becomes available for sale at some point. At this point, they're pulling API and third-party access. Robintrack.net will lose and cease to function at that point. All right, they won't have the data anymore. It's sad. It was a cool little tool, but now it's gone. All right, in today's markets in Asia, oh, by the way, I want to say this. The tool might be gone, but you still need to have the skill. You can always tell where retail traders are, right? It ain't hard. You just have to learn how to spot the patterns. If you're using your brain to think, you're never going to figure it out. If you're using your eyes to see, it's right in front of you. It's hidden in plain sight. All right, despite Robintrack being gone or disappearing, if you know what to look for, if you look at the things we looked at the taught in the foundations, future score, etc., you know how to find retail traders. That's how we profit. We find retail flow, trade against it. All right, we find professional flow and trade with it. That's what order flow is all about. Learn how to read that TradePro Academy. You don't have to rely on Robintrack, one platform. Look at the orders coming in. That's what's most important. And you can see it in real time. All right, who cares how many people are long Ford stock? That's a month ago's news. The question is what happens right now. And you could see that in real time with order flow. So farewell, Robintrack. In today's markets, in Asia, Japan's down 0.4%. Hong Kong's down 0.6%. China's up 0.8%. India's down 0.4 as well. In Europe at midday, London's up 0.5%. Paris is up 0.6% rather. Frankfurt up 0.3%. So weakness in Asia, but on the turn, pretty strong in Europe. And then on the turn, once again, in the U.S., Dow, S&P, NASDAQ had some slight positive gains. Now they're at their prior day closes, more or less. All right, but the S&P is within 1% of all-time highs. All right, get this. The futures pandemic failed their rally at 33.9750. This is on the futures. And I always say this, if you're long and you like the 3,400, take the 98.5, take the 97.75, take the 97.25, 97.5. Take it before the 3,400 even, because everyone's waiting for 3,400 even. Humans like round numbers. The market is a mess. You're not going to get a round number. What satisfaction you get of getting a round number? Nothing. It's the same thing. There's a couple ticks below, but your chances of getting paid are much higher. Always get paid before a big round juicy number. Pro tip right there. Funny, failed at 97.5. I think we're en route to punch a new all-time high. All right. And then I think that all-time high will be faded pretty strong. So keep an eye out on that. Crude oil is up 1.4% this morning. Morning, Dan. Morning, Garth, Craig, all of you guys on YouTube, Devin, William, Corey. Let's go, brother. Gold is up 0.6% to 2040, and Bitcoin up 2.9 to 11,746, close to 12,000. All right, so a little bit, pretty much everything's bid. Equities and risk-off assets are taking a bit of a move higher. All right, this morning at 10 a.m. we have the JOLTS job openings labor turnover survey. Last Friday we had one heck of a jobs report, pretty positive. Okay, the market got afraid that the Fed would take its stimulus away and didn't really rally as much. Today we have JOLTS job openings, labor turnover survey. It's a pretty important indicator. It's medium impact. Be aware of it. Manage those orders around 9:50. Get ready for it, and then post the report. We could take a news trade if the news is big, or we could just continue with the regular order flow trading. All right, that's it for the calendar today. It does pick up through the rest of the week. I'll give you the other news events tomorrow, but that's what we got for today. So I think today's market might be a little bit slow. It looks like it's establishing a potential range day. All right, if that's the case, sell rallies, buy dips. Above the 55 half, you got to be long. Below the 35 even, you got to be short on today's market. In between, you can almost kind of just let it coast. That's what it's been doing overnight. Very low volume. All right, YouTube. So you got, it's Monday. The market usually takes one day to pick up. Tomorrow, Tuesday, Wednesday, Thursday, we have a lot more events as well. And the Friday, it'll pick up. Don't force it today. You don't need to force anything on a Monday. Take it as it comes, and we can scale up and build up our positions over the week. Love you guys. Be careful out there. Be careful out there today. Manage that risk. Manage those orders. And we look forward to seeing you in our trading room. Come check it out. All right, you got a 14-day money-back guarantee. It's risk-free, and it's a monthly subscription that's so low, people think we're nuts for selling it at that price. When you look at the value inside the membership, you're going to email me and say, you're crazy. Why is it so cheap? Even during a pandemic. Trust me. You guys take care. Love you all. Be good, and I'll see you in the room. Trade Pros in the room. We're going to get started in a moment, and I'll flip it over to Steven to have a look at the oil markets, and then we're going to bring it back for equities and gold. Queue up some trades. All right, YouTube, take care. See you tomorrow. Ciao.